What to say to banks to get your deal done. I'm Tim Diesel, I'm a commercial real estate consultant, and in this video I'm going to tell you what to say to banks to give your deal the best possible advantage, all right? So let's break this down a little bit. Now, whenever someone has a deal, let's say it's a multifamily deal or a retail building or whatever, whenever you go to a banker, the banker will tell you, oh, we care about this, and this, whatever the items are. The truth is, they care about the deal, but they want to know you know what you're doing. And they don't like taking risk, especially right now. Banks never like really taking risk. They're very, very cautious about their deals. So let's say you have a deal, you put it together, you've analyzed your numbers, you've checked all this out. Now, your debt coverage ratio is very important. If banks sense you don't know what that is, they won't want to do business with you. And I'm just telling you, this is kind of what it is. I have not seen a banker walk me through a deal ever. They just don't do that. They want a good, solid, surefire deal. They don't want to do anything too risky, and sometimes they'll run it through, but that's not really what they're looking for. They want A paper, good quality deals. So when you're having a deal together, let me tell you what they're looking for. They want a resume, right? They want something showing that you have experience doing this before. They want to see your schedule of real estate. What else do you own? Why? Well, because if this goes bad, they want to know what else they can take from you. This is the truth. This is the stuff they really want. And they're not going to put it to you this way. So when they're looking at your deal, does it debt cover? 1.2, don't forget those numbers. And I'll break down another video what debt coverage ratio is. And I think I have one. If you do some searching, I've got a video out there on debt coverage ratio. Now, as long as the property is above 1.2, you're looking good. You're going to want to get as close to 2.0 as possible. Now, here's the problem. It doesn't matter how much the property cash flows. It doesn't matter how strong it is. The bank wants to know the person in charge of this project is someone reputable, someone who knows what they're doing, right? Now, a lot of times people get hung up on non-recourse and recourse and all that. It really doesn't matter, and I'll tell you why. Whether it's non-recourse or recourse, you don't want to do a bad deal. What do you care if it goes back? You don't even want to think that way. You want to get into every deal knowing that it's solid. Now, the advantage is if you have a huge portfolio and you have a non-recourse deal, that could be beneficial because if something goes bad and you have a recourse loan, well, now it could jeopardize your entire portfolio. That's not a good thing necessarily, right? So when you're talking to bankers, they're going to want to know the project. They're going to want to know what are you planning on doing. They're going to want to know what your background is. Why are you qualified to see this deal? Is it just something you looked up on LoopNet and you want to try to piece it together? Who's involved? What is your plan? Come up with a business plan. It doesn't have to be 30 pages. Just come up with an idea of what you want to do with this thing. Banks will lend you money if you know what you're talking about. It's very, very simple. Now, many times they like to see cash in the deal. And what I'll do is I'll break down how you can do a seller financing video on another one so I don't confuse you. I don't want to give you too much at once. If you structure the deal correctly with the right bank, this shouldn't be that difficult. Some banks have a different appetite, right? Some banks are, I don't know, they're very, very rigid, very, very strict. It just kind of depends. When you're having conversations with banks, make sure you kind of go on the offensive once in a while. Start asking them what they've done. What kind of deals do they generally do? Ask the lender, tell me about your last couple of fundings. Turn the tables around. Don't be the prey all the time. You know, hey, they need to earn your business too. If the deal is that bad, you don't even want to deal with it anyway. So you only want to take a good deal to a bank. After you've analyzed it and you've seen the growth and you see all kinds of things you can do to it, that's when you should be talking to a bank. So the biggest thing to take from this video is when you're talking to bankers, they want to know you know what you're doing. You don't have to be an expert, but if you have a business plan, if you're talking about numbers and what you're going to do with it and you have experience, if you don't have the experience, they're going to want you to bring someone on who does have the experience. Don't jump into a 200 unit deal if you don't know what you're doing. Start small if you have to, but just put some pieces together. If you have a partner that maybe possesses a lot more experience than you, bring him in. If you have someone else who's got a lot more capital than you, bring that in. So this is the way they're looking at things generally. They want to know that if this goes bad, what can we do about it? So if you're stacking on a creative deal, it's going to be a little risky for a lot of banks. A lot of smaller banks will take those risks because they need that business. So I hope that was helpful. And if you have any questions on it, just let me know.